Success comes in cans. Failure in cants. Wilfred Peterson. My friends, we see everything up for the day, all 5 of our charts. And about success coming in cans. You can do this. 10 to 15 minutes a day, that's all we ask. You can spend the amount of time that I spend for you every day for free putting this broadcast together. It's actually a lot more than that. The broadcast alone, not the prep time, not the post time to get it all put up everywhere, but 10 to 15 minutes of the actual broadcast. You can spend that time filling out your daily market worksheet 4 days a week, your weekly market worksheet at the end of the week when you listen to the weekly review and forecast, your trade worksheets when you do practice trades. Please, my friends, you can do this. Now, Patreon members, I told you yesterday in our Q&A session that we do once a month for our Patreon supporters just to say thank you at any 3 of the levels of support. I have 10, count it, 10 weekly vertical crossover potentials tomorrow at the close of the market. I'm sharing with you going up today. Another 10 potentials going down. That list is coming out to you. If you want to always have something to practice and work on, then become a Patreon supporter. We appreciate them so much. They help pay for the bandwidth, the texting service, all the stuff that we got going on here. Let's jump into these charts. First thing we jump into is the S&P 500 up about 0.5%. Looks like we're going to have a weekly vertical crossover, most likely, unless it's a big down day on Friday, going up. So keep that in mind. Watch for that. We see the derivative oscillators positive, price percent oscillator trying to peak over, hit a higher high. We go to the 2-day chart. We can see now the prior 2-day candle ended on Tuesday. This is the Wednesday, Thursday candle, reaching a higher high, moving up that 2-day trend line. Derivative oscillator gaining upward momentum, price percent oscillator spiking up. We see on the half-day chart how things had rolled sideways, but ticked up on Thursday. So we do see that happening, most likely a weekly vertical crossover. Be ready to potentially jump into that if you want to do a practice trade, and everything being equal, you think that makes sense. Now, is there a potential divergence? Well, yes, there is. Why? Because you can see that when things crossed over last going up, the market was at a lower point price-wise. You can see now that with the crossover happening, the price percent oscillator is actually lower than it was previously. So that divergence could be of some concern to you. Take that in stride. Pay attention to that. Do your backtracking. And again, always practice. Always be willing to practice and learn. What do we see on the Qs? Well, we don't have a crossover on the weekly on the Qs. You can see that we do have a big green up candle. Derivative oscillator still negative. Price percent oscillator negative, heading up. 2-day chart, we had that 2-day crossover back on Thursday the 1st. And we see that it's continued to move up. And the price percent oscillator, derivative oscillator going up. Half-day chart. Again, like the S&P, things had slid sideways until on Thursday, bumping up in the morning, about the same in the afternoon. So we'll continue to watch the Qs, see how that shapes up. What about 20-year bonds? Up for the day, 0.83%. Oh, by the way, the Qs up over 1%, 1.04. 20-year bonds continuing that sideways slide, generating little green spinning tops. Almost a doji this week. Actually, looks like it might be getting a little bit weaker. Price percent oscillator moving up, derivative oscillator losing downward momentum. When I say weaker, I'm talking about the symbols we're seeing there from a fatter green spinning top getting smaller toward a doji. We go to the 2-day chart, and of course that crossover occurred back on the 29th of March. We saw 2 days of down movement, the last 6 days up movement, moving right up that 2-day trend line. Which way are bonds going to go? Are we going to have a crossover coming soon? It's about time. You know when bonds crossed over going down? All the way back. Almost a year ago. 11 months ago. Boom. That's a lot of down movement. Now, they did go down for several weeks, giving us a great opportunity popping up, and then we've had over the course of time a couple of 3 different opportunities for successful 2-day recrosses there. So we'll see. Maybe things will shape up for another 2-day recross. We'll see how that works out for us. Now, 2-day chart we talked about. Did we talk about that? And where we are, I got off on another band. Let's just quickly cover that. What we see going on, of course, is price moving right up that 2-day trend line, half day. We can see again where things are continuing to meander up. We have a half day and a 2-day trend line about laminated there. And again, price is continuing even on the half day to sort of continue to tick up. So we're just waiting to see which is going to happen. Weekly going to go in the direction of the 2-day. 2-day going to rotate over for another 2-day recross going down. Don't know. We'll wait and see. We see the biggest gainer next to, of course, Bitcoin, which again can spiral one way or the other in huge chunks. On our 4 big charts was gold 1.08 up for the day. We do have the first open box green candle since all the way back at the beginning of the year, first week of the year. First green up candle that we've seen. Oh, well, I take that. There's a little spinning top there back. Yeah, we can go back to the week ending the 19th of March. It was hidden by the 2-day crossover. But what we see here is a bigger up box on gold. Derivative oscillator still negative, price percent oscillator negative heading up. 2-day, what we see is 6 days of up movement moving right up that 2-day trend line. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Go to the half-day chart. What do we see? Again, see things just moving up quite nicely. See if I can draw a better trend. There's a better trend line for us on that half-day chart. Again, price continuing to move up. I'm ready for gold to bottom. I'm ready for gold to cross over going up. Could that happen next week? Wouldn't that be beautiful, friends, to jump into gold, see it spike up and ride up? It's been a while, hasn't it? Gold, once gold spiked, once gold reached its high of somewhere around the 194.45 mark and then slid off and has been heading down since, I'm ready for gold to start building some value. I'm waiting for it with bated breath. Now let's leave gold. Let's go to Bitcoin. Like I said, Bitcoin up for the day, 1.66%, our biggest gainer, but that's not saying a lot for Bitcoin. Still, where is the price? $57,710. What was the high for the day? 59.2. Well, that's for the week. 59.258. Was that for the day? Let's check that out. No, it wasn't. It was higher earlier in the week. So we see for the day, it had a high of 57. So let's go back and just look at the weekly first. We see the price percent oscillator still pulling away from the red signal line, heading down. Derivative oscillator gaining downward momentum. 2-day chart continuing to head down. Red down, solid red down candle that's formed. Not a big one, but again, still showing some rolling over action. Derivative oscillators about flat. Now that half day, we can see where for 2 days, strong down movement, not much in the morning, popped up in the afternoon, but didn't change the price percent oscillator. So where we are on Bitcoin is, still looking to find its legs. At some point, it may very well test that $59,000, $60,000 mark. And once it pushes through that, who knows? We'll continue to watch. Thank you again so much for being with us. We appreciate you always. You don't have a copy of our book. I have an autographed copy waiting for you. Follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.